In this video, we're going to focus in on Rule 289. Price waves are structurally bound. This is quite an important rule, and I'll show you why. In fact, you can use this rule to predict where prices are going. As an example, let's have a look at the VIX futures. You can see the VIX futures coming down, coming up, coming down, going up, and etc. Now, what does this actually mean? If you were trading or investing inside the stock market or crypto, why don't we just pop on Bitcoin? Okay, that's a little bit better. What we can see as the VIX futures was coming down, Bitcoin was absolutely going for it. But when the VIX futures started to base, we saw them increase and Bitcoin decrease. Remember, everything is not perfect, and I'll explain just a little bit more on that. As the VIX futures came down, Bitcoin came up. It started to base, Bitcoin came down, and then notice a slight divergence here and a rallying in price. But what you can actually see, VIX futures down, Bitcoin up, VIX futures up, Bitcoin down. Now, is this a reasonable relationship, this inverted relationship? Well, let's check it out. Let's just invert the Bitcoin chart and see if it's following. We can see this up and down price action. It does a rather good job of following the inverted VIX. For example, when Bitcoin, if I was to uninvert Bitcoin and invert the VIX, hey, why don't I do that? Now, how do you do that? Okay, just go to the scale, invert scale. So the big number is at the top, little number is at the bottom. This is a normal scale. Then we come across to the VIX here, we're going to invert that. Now, what are we seeing? The inverted VIX and Bitcoin is just another way to say exactly the same thing. And don't forget, the VIX is a measure of risk on or risk off activity, and Bitcoin is very sensitive. It literally front runs the VIX. It detects weakness or strength in the VIX, so don't expect a perfect overlay. Remember, you're not perfect, nobody's perfect, and so we could say financial charts are not perfect either. But they're pretty close. Now remember, what we were talking about are price waves. These price waves that occurred are structurally bound. How do we prove that? I'm just going to get everything back to normal. For a price wave to be structurally bound, there must be structural support in here, structural resistance, structural support, structural support. Is there? Now, the only way to detect true structural support is through Level 1 and Level 2 standard certification, which draws up these CTKS lines, also known as SLs and Stanfield levels. What you can see is the thicker and more clustered, the stronger. And we've been looking at this for quite a while now, at least the past 4 videos, where we said this level of structure is an important area to keep your eye on, as is this level of structure right through here. Now, we saw that when we came into structural support, we were starting to find that Bitcoin, you can see Bitcoin in the background, was starting to come down. I'll just make that a bit lighter so you can see it. Why was that the case? Because we were getting level after level of structural support and all of this structure down here. That was basically saying, Bitcoin was saying, I think the VIX is going to spike, and it did. Now, what happened when the VIX spikes? Well, the main markets will come down. If you're trading Apple or Tesla, Nvidia, MicroStrategy, whatever it is, that's going to come down as well when the VIX comes up. So literally, Bitcoin is the dominant VIX out of all of the VIXs. And when we talk about price waves being structurally bound, these are the structures that have been binding the VIX futures. And of course, what binds the VIX binds the markets. How do you take advantage of this? Well, if you're trading or investing, you're DCAing in, hopefully with intelligence. And as the markets retrace into structural support for the VIX, you don't want to be buying here because that's the top. What you want to do is to start layering in your positions as the VIX gets into structural resistance, because that's pinning the bottom. You don't want to buy here, buy there, buy there. You want to buy here, around there, and here and here. You get the idea. You can't pin the bottom perfectly, and you don't need to. Now, a lot of people really beat themselves up if they don't buy the bottom and sell the top every single time. All you need to do is to just basically understand when you can read structure, intercorrelation, and interconnection, you can stack probabilities, you know which direction the market is likely to go in over time. That means that you've got a better than average opportunity to get in and out of the markets with knowledge and not with guessing. Before we get into the video, I'd just like to do a quick shout out to our incredible global family. Each and every day, it's just an absolute pleasure for us to be here. And for everybody here right now, you are absolutely awesome. There is a lot of negativity, a lot of fear, and a lot of doubt inside the markets at the current time. And what I seek to do each and every day is just to give you a little bit of an edge in the upcoming price action. Kate and I are both very grateful that you're here. And if you're new to the community, a very warm welcome, and you might want to smash that like button and subscribe. We have one of the best communities on YouTube. Rule 219, be kind to yourself. This is a pretty interesting rule, isn't it? Why should you be kind to yourself? This is financial markets. If you make a loss, shouldn't you beat yourself up? The answer unequivocally is no. You should be kind to yourself and also be kind to others. What you will find when you first start off, you're going to go through pullbacks in the market. And if you're dedicated and committed, you're going to either win or learn and never blame. When we are unkind, we blame. It's so easy to detect unkindness. It always has blame. If you're blaming yourself or other people, what you're actually doing is that you're not winning and you're not learning. You're just going backwards. You must always learn. For example, if you were looking at the VIX, you know where the structure is, both the structural support and structural resistance levels. If you were trading, for example, a crypto alt, and you knew that Bitcoin was coming into a level of VIX structural support, that would mean it was likely that Bitcoin would go down as this bounced up. As we've seen recently, you could get very angry that you didn't take action. And then you could be unkind to yourself. And then of course, what you give, what you get. If you're unkind to yourself, that can easily spill out to being unkind to others. But all that's actually required is just to understand where structural support, structural resistance levels are, and just deal accordingly with those levels. Always being kind to yourself along the process. Therefore, looking at the futures such as the inverted VIX futures, as well as the major index E-mini futures, can give you a really good assessment if the markets are going up or the markets are coming down. Bitcoin is literally the best indicator that you can look at. Because Bitcoin is so incredibly good at detecting if there's risk on or risk off activity inside the market, we need to look at the structural levels on Bitcoin as well. We can see around the 95,000, there's structural overhead resistance. We've just come into structural support literally at this 94,628 level. 94,400 is also quite important, and we have a level underneath that. If we get filling of this negative CTKS gap, around that 93,400 is where we want to pay attention to. Don't forget you can have structural overshoots just like we saw here, but you typically get interaction. If you look in here, you'll see interaction with this level of structure before it couldn't confirm it. The key is to keep your eyes on stacking probabilities. Remember how I had all of those futures overlaying Bitcoin. You want to keep your eyes on those too. Also, keep your eyes on the structural levels of total crypto market cap. We've seen that we've just moved into so much structure just recently, and it's been hard for Bitcoin and the entirety of the crypto market to get through all of this sell side structure. But we know what's going to happen pretty easily. The blue line is Bitcoin. You can see Bitcoin and total are literally one and the same. If Bitcoin starts to find substance and starts to find levels of structural support and intercorrelation and interconnection shows that the major market indexes are going up, we'll churn and burn through all of this structure. But if we continue to see weakness, it will come down. And don't forget, we're on a negative CTKS gap in terms of total crypto market cap. There are always advantages inside financial markets. If you're investing and trading, which is the thing that you should actually do, invest as well as trade. When we trade, we actually time the market. Investors don't do anything like what we're doing right here. Why is that? Because they basically throw money at something, typically when it's been very, very green, and say, this thing is going to infinity and beyond, like Buzz Lightyear. But unfortunately, it's just going into structural resistance, and the market has a habit of pulling everybody in at the wrong times and pushing everybody out at the wrong times as well. These are powerful understandings. If you understand that the market's job is to attract those that have no and very little knowledge and just say when it's green they will buy and when it's red they will sell. Market makers have an easy way to manipulate people. Please don't be manipulated. Just simply look at structure. Look if structure is failing. Look at the negative and positive gaps and look at structural overhead resistance and structural underneath support. Then when you start to do your overlays of structure and get your intercorrelation and interconnection, you're actually stepping up to the institutional grade level, becoming an institution of one, and that's literally what it's all about. That's what I want to help you to get towards. As you've made it to this part in the video, I want to offer you some insights on gold and also the VIX. What you've seen recently, or what we've seen inside the markets, when the VIX comes up, which is the red line, this is just the normal VIX. When the VIX comes up, we see gold coming up. When the VIX comes down, we see gold coming down. But what is gold doing at the current time? It's basing. And what is the VIX doing at the current time? It's also basing. Now, does this mean that the VIX could in fact kick up? Now, you know exactly what that means. If the VIX kicks up, what we should see is gold kicking up as well. Now remember that gold and Bitcoin, well, Bitcoin may be digital gold, but it's still the best risk on and risk off indicator, and it inversely follows the VIX. So this means you can hedge with gold and you can also hedge with Bitcoin. But one thing to note, Bitcoin has been going gangbusters since the VIX declined like this. Gold has been coming down. A lot of times people have a go at gold holders and Bitcoin holders and all of that stuff. I don't know why they do that. They are two different things. I guess it's that bridge that people are calling digital gold. Bitcoin is digital gold. I don't think so. I see Bitcoin as being the VIX on steroids. Therefore, it's an incredibly good measure to understand. Even if you don't invest or trade in crypto, if you don't understand Bitcoin, it's like not understanding the VIX. And if you say, but Ken, I've never looked at the VIX. Well, now you can because you know how important it is. Therefore, stacking probabilities, when you see gold starting to break out accompanied by an increase in the VIX, pay attention to the stock market and the crypto market. It will have negative price momentum. If we see gold is coming down and the VIX is coming down, just think stock market is coming up and crypto is coming up. The more probabilities you stack, the more certain you'll get. Understanding intercorrelation and interconnection and structure is terrific, but you also have to have a good mindset. So that's why we do the creed. If you understand the price is always moving structurally and the markets are here to educate and not to punish. Through your dedication and commitment, you know that you either win or learn, and you don't blame because that makes you unkind. The issue is when people get unkind with themselves, it's because they're blaming, and when they get unkind, they cannot learn. And when you cannot learn, the market will take from you mercilessly. That's why I cover off the mindset, because it's really, really important. Always remember that all results come from the mind. If you're not getting the results you want, it just means that you need to change your mindset. Just improve it. The world is always growing. Don't think that you shouldn't grow. Inside financial markets, we take uncertainty by stacking probabilities and we convert it to a probable outcome. If it occurs or if it doesn't occur, it's really related to what happens inside the market. Remember, a better mind creates better outcomes, and the way to get better outcomes is just to create better habits, to create your better life. Please let me know what part of the CTKS Creed is the most important to you, or perhaps it's something that's not here at all. Please let me know in the comments. And thank you for being here. And Kate and I look forward to catching up with you again in the next video. Bye for now.